Hello, everyone. Welcome to this AMA live stream that we have today. Um, Thank you for joining us. We're starting to get some people joining in. Hello, Anurag. Hello, Dennis. How are you guys
Hey,
doing today?
good. How are you doing?
I'm doing good. I'm doing good.
Yeah,
Uh, yeah. All right. So, we can wait for a small while as people join in, and meanwhile, I'll discuss about what we're going to be talking about today and all of that good stuff. So today's live stream is titled "From Wall Street to Web3: Blockchain Infra Powering RWAs." We're diving deep into how real-world assets are moving on chain and what's enabling this shift. We'll be going over why RWAs are heating up now, what's missing in today's on-chain infra stack, and how Lumia and Avail are uniquely solving these pain points, and maybe some alpha drops from both teams and some Q&As with the community. Does that sound good?
Yeah.
yep. Sounds great.
Awesome. All right. So today we have Anurag and Dennis. Anurag is co-founder at Avail, and Dennis chief blockchain architect at Lumia. Do you both want to maybe give yourselves a quick introduction about yourselves, what you're doing, and what you're working on right now?
Yep.
Sure.
Dennis, you can go ahead.
Okay. Hello, everyone. I'm Dennis, blockchain architect at Lumia. I focus on the development on chain side of things and applications that are being built around the RWAs tokenized assets that we're bringing on chain. My background is I'm a software engineer. I've been a software engineer for 15 years. Started, of course, in the Web2 space, startups, corporates, mid-sized companies. Then I came across Ethereum about in 2019, 2018, while doing a private permissioned blockchain for a bunch of banks. And as soon as I came across Ethereum, I quit my job, jumped into Web3, and I've been in Web3 ever since.
Awesome. Hi, I'm Anurag, co-founder at Avail. I entered the crypto space back in 2017. Founded Polygon at that time. We actually started Avail within Polygon back in 2020. We spun it out in 2023. And so we've been working on scalable modular infra and interoperability since then. Of course, before 2017, I used to work in fintech, tech, financial services, and so a very keen interest in like enabling RWAs on chain. I think RWA is like we've been kind of doing all of this infra building with complex DeFi infra, block space, that sort of a thing. And it has become very mature on crypto native assets. And I think now is the time when we actually bring assets from the real world onto this global block space ledger, essentially. And I think this is going to be pretty huge. So, yeah, very happy to be here.
Awesome. Yeah, that's actually pretty great, right? And before we actually dive deep into much of this, RWA stuff, I wanted to actually know what excites you both most in this on-chain RWA movement. We're still seeing a lot of stable coins, RWA stuff happening in CT and in this crypto industry right now. But what actually excites you in this moment personally for you?
Um, so from my perspective, there's a few things that I'm really excited and looking forward to. In general, everything coming on chain and upgrading the current infrastructure to be a distributed ledger-based infrastructure is quite exciting. Whether that's bringing RWAs on chain, stocks on chain, or bringing normal business processes on chain to make it more streamlined and to make it more transparent. I think Web3 in general is quite an exciting development. Of course, RWAs are taking the lead right now because it's sort of become the Trojan horse to bring TradFi into Web3 and show them that they can save a bunch of money through back office streamlining, getting rid of the middleman, getting rid of wait times, settlement times, and they see the benefit. But when you look at the bigger picture, with AI agents, becoming a standard in the space, it it's sort of this convergence between two main technologies that has been sort of pushing forward in the last 5-6 years, and now you can see a sort of rough picture of how they're going to work together to build the future of finance and to build the future of business in general. And that is quite exciting, looking for opportunities to streamline businesses, to streamline processes. It's quite a challenge. It's an engineering challenge, which is enjoyable, of course, if you're an engineer. Yeah, that the whole thing, it's quite appealing to me, and that's why I try to push boundaries, see what we could do, how we can bring the TradFi people, Web2 people into this space, and go beyond this echo chamber that we have developed in the crypto world.
Yeah, I mean, see, my perspective is that essentially, if you kind of zoom out a bit, right? Like, I mean, the entire world really runs on ledgers, right? Like, I mean, we've had things being digitized since the last 30, 40, 50 years. And if you kind of think of it, like every major system is essentially a ledger, right? Like, I mean, your stock exchange is a ledger, your bank account runs on ledgers, for example, right? Like, so, I mean, in general, traditional finance is a system of ledgers. I mean, other industries are also kind of, like have the backend as a ledger, right? Like, so your bank account is a ledger where there is debit and credit for, each transfer, for example. So, uh, all of the systems are essentially ledgers. And what we are bringing in the blockchain world is really these decentralized distributed ledgers, really. And the thing is that, of course, traditional finance has a lot of systems, and then essentially what works right now is they kind of talk to each other. So from an interoperability perspective, how they look at it is basically, you kind of expose an API, and then you can talk to other systems through these APIs, for example. And so really, if you kind of take a look at these, traditional finance is comprised of a number of systems, which kind of interoperate via some sort of APIs, or in some cases, there is, of course, some manual interop happening, for example, and so on. That's why you will see things like settlement times of T+2, for example, and so on. And that is really the time that it takes to kind of communicate across different ledgers. And so I think the value prop of the entire blockchain industry really is that, what we are really creating is these global or ledgers that work globally, right? Like when anyone can kind of plug into these system from any country of the world, right? Like so, and from my perspective, what we've been doing in the last 5-10 years is kind of, like when a new technology like blockchain comes in, you need to have some early use cases. And so crypto native assets were the first use case. So we had like a bunch of crypto native assets being issued on chain, and then we've kind of built more and more complex infra. So not only do you have payments, you also have things like swaps, you have, like complex lending, borrowing protocols, derivatives, that sort of stuff, right? Like, and I like to think of this as like a very strong stress testing of all this infra. So you've had countless DeFi protocols being made, but battle tested all the time. Like going through a number of hacks, for example, just to find chinks in the infrastructure. So this is really, if you kind of think of it, this is like real-time stress testing on a very large scale that has been happening. And so now the infra is, like become very, very strong, very, very battle tested. And now, because if you kind of see the rise of stable coins have risen in the last 5 years from zero to, or maybe less amount, to about 250, 240, $250 billion at the moment. And we finally have all this infra around stable coins, right? Like it's not only about issuing stable coins or minting and burning. It's also about having things like OTC desks in various countries where you can go from fiat to crypto and back, for example. And so I think stablecoins are at an inflection point. And so this is the right time to think beyond that, right? Like, I mean, once stablecoins are mature enough, what do you do with that, right? Like, I mean, can you get yield on this? Can you kind of tokenize other stuff and get a loan lending facility on this? Can you build derivatives on this? And so, in a sense, you will have in the next few years a lot of traditional financial instruments being replicated on chain, really. Things like derivatives, things like asset backed securities, and much, much more. And I think we are at the prime stage when this is going to explode.
Yeah, agreed. The space is growing fast. We've got a lot of cool things that are being worked upon by Lumia as well. Um, but Anurag, I want to also ask you this, right? So you've mentioned how stablecoins have come. It has solidified its place. But we've also seen other RWA projects out there, right? We've heard a lot of blockchain infra that powers those RWA projects as well. But what does modular infra actually unlock for RWAs that maybe legacy monolithic chains cannot?
See, to be honest, right, like, see, we have to kind of get out of this, like crypto specific mindset in general of, let's say, monolithic modular sort of infra, right? Like, all of this is essentially, again, as I said, ledgers. Right now, different systems have different trust properties of the ledgers, right? Like, I mean, if it's a monolithic chain, it's depending upon the crypto economic security that it offers. Modular infra, like offers us a different use case for kind of scaling in the sense that there is a shared security layer on top of which, like layer two solutions can be created. But essentially, like for a moment, setting aside all the trust and security guarantees, for example, all of this is in essentially we are in the business of building ledgers. And of course, all of these systems have slightly different guarantees depending upon the crypto economic security, for example, and so on, right? Like at the end, what will count is, of course, you need to have scalable infra, right? Like that is a that is table stakes in general, right? And now getting these real world assets on chain is requires much more legwork on top, right? Like, so once you have the ledger, it also requires things like tokenization. Like, I mean, tokenization is not just creating a ERC 3643 token and being done with it, right? Like, I mean, there's a bunch of off-chain compliance, governance, risk uh, mechanisms that have been to put in place, right? Like, so the first step is essentially, like having the, of course, all these scalable ledgers in place. Now, of course, once we kind of start to think of these traditional finance systems, uh, scale, there has to be enough scale, right? Like, I don't think any one chain will be able to support all of this. So then you need to put in multiple ledgers, for example, and that's where really modular shines, right? Like, I mean, so for example, of course I'm trying to speak on behalf of Lumia, but like for example, if Lumia kind of runs out of like throughput on their one chain, tomorrow they can think of adding one more ledger or layer two chain, which can then interoperate through, let's say, a Whale Nexus, for example, so that like we can enable more and more RWAs, right? Like, so that we have to think it step by step, right? Like, so there is scalability, then there is that whole tokenization aspect. Once you kind of have tokenization, it is available for purchase. You will think of things like swapping between these assets. You will think about creating more derivatives on top of this. You will think of using them as lending, borrowing protocols. You will have to think about liquidation measures, for example, secondary liquidity, like things like that, right? Like, so there's a bunch of stuff. But where modular comes in really is, like the ability to kind of, scale as you go, and without increasing the trust guarantees. And of course, everyone in this space will build more middleware that can make this entire tokenization RWA movement possible, right? Like, so there's a bunch of things that will come.
Right, makes sense.
Just to add a couple
Dennis,
of points to the whole modular section. So it's going to sound like myself and Anurag had a conversation before, but he actually nailed in terms of having multiple DLTs to scale things up, because that's something that we've been focusing on. So where modular comes in quite handy for us is, each chain has its limitations. We could post vanity metrics and say 10,000, 100,000, 200,000 TPS, but the reality is when transactions get complex, your TPS does degrade over time. Of course, simple transfers, you could take that number and throw out insane TPS, but the reality is when systems start working, they do more than just transfers. And that's when we need to think about sort of scaling things up vertically and horizontally. So one of the things that we're doing, for example, which is why we also partnered with Avail because of our long-term vision, is you'll hear more of this in the coming weeks, but I guess it's a bit of an alpha that I could drop here, is that we're building this sort of infinite, we call it infinite, so infinite internet effectively. And what we want to do is we want to have L3s spin off from the L2 itself, the Lumia chain itself, and have each asset owner, well, not each, but where it's applicable, where they need scale and they can justify the cost of having their own blockchain or block space, they can spin out L3s, and they are all interconnected and interoperable between Lumia and itself. And then, of course, across all of L3s that will start spinning up through things like Avail's Nexus, Polygon's Ag layer, Hyperlane's interoperability communication protocols. So that comes quite handy, because then we can share states between these chains and allow liquidity to flow in and out, even though they are sort of sovereign rollups or layer threes, and the asset owner will have total control over the chain if they wish. They can make it permissionless, permission gasless, etc. The main thing is, regardless of their configuration type, they can interrupt and they could interact with all existing chains. And that's quite important, to be able to stick something in, like a module in, and remove it. Maybe some chain will require DA, Nexus, Fusion altogether. Maybe one chain will require just the Avail DA side of things. So that modularity and that flexibility gives us the tool set that we need as a company to cater to our institutional clients and make sure that they get what they want at the end of the day. And that's quite important. And we've seen the same kind of pattern in traditional Web2 development as well. We had monolithic systems first, then we had microservices, and now we have both, and people pick and choose what suits, what fits them. So it was quite an important step for Web3 to take from monolith to modular, and now have a stable sort of stack for both sides, depending on your needs.
Yeah, great points from both of you there. So Dennis, but from Lumia's perspective, right? What are the biggest blockers for institutions or RWA issuers coming on chain today? Like, what is that? Is it regulatory? Is it something else? And what are you doing to solve that? And what are you doing differently from other RWA projects out there?
Yeah. So based on our experience over the last 10 months interacting with several sovereign states, institutions, and different players and big players that want to come on chain and upgrade the system effectively, there's two things that keep popping out. One is regulatory clarity. So we need more regulations. We need more clarity on the regulations itself. That's in terms of issuance license, exchange broker license, distribution licenses, and ability to tokenize assets globally and offer it globally, regardless of the jurisdiction of the license that you get. So that's one thing that needs more work. I know, for example, obviously the US is working on a legislation to make things much better. They just passed the Genius Bill Act. So things are changing, and it's changing for the positive, which is great. And we've been working for the last 10 months on these licenses in the background, to see where we fit, which one we need. And we made good progress on that, but it takes time. It takes time, and it's not a cheap venture. It's quite an expensive venture to get these licenses. But effectively, once you have it, you can really scale things up and allow asset owners to really piggyback off your infrastructure, just like today's hedge funds, once they acquire a certain license, they can do X, Y, Z for their clients. The clients doesn't need to have the license as well. So that's kind of the same process we're taking. And that was one of the main blockers. The second part is liquidity, right? So liquidity has become a problem in general, even for crypto native assets. When you start trading on chain, especially when you come off sexes, you can see why liquidity is an issue, because there's just so many things out there, and liquidity is spread across. And you need to find a way to handle large trade amounts. We're not talking about retail trades where you do $100, $200, $300. These are easy, and they easily be sort of settle. You can settle these transactions easily. But when you start bringing institutions and they start trading about million, 2 million, 3 million, even like up to 10 million per trade, then you realize, the liquidity is just not there. It's too fragmented. And that's one of the things that we're tackling as well through Lumia Stream. So Lumia Stream is effectively a liquidity fabric across chains, or conduit. I mean, to be honest, if you wanted to look at it as a traditional finance term, you could probably call it a clearinghouse to a certain extent, because multiple users and actors connect to the system. They provide liquidity, and we just kind of let the trades match and settle, and then allow people to use the best prices across sexes and dexes. So that's one of our focus points, and we really want to push on that, because without solving the liquidity fragmentation and the thin order books that we have across the Web3 space, you're not going to really scale up millions and billions of dollars worth of commodities on chain and make illiquid assets like real estate more liquid, because you don't have a solution in hand. Yeah, you have all these fancy protocols, but where is the liquidity coming from? And that's what Stream is focusing on, and that's what we want to really push in terms of the how we bring and unify this liquidity. So that's our focus. That's the 2 points that keep popping up every conversation we have, and we realize the bottlenecks, and we're trying to solve those actively.
Gotcha. Anurag, do you have anything to add there?
Yeah, I mean, of course, I will echo what Dennis already said in general. But the thing is that in general, things are moving in a very positive direction. So, of course, you more and more regulatory clarity is coming, and essentially the so there are two aspects to this, right? Like there is a supply aspect and a demand aspect, right? Like the supply is basically what RW assets can come on chain, right? Like, and how do you get them? What are the regulations around it? Who you can sell to, for example? Do you sell to accredited investors? Can you sell to retail? What are the licenses, for example? So how do you make it easy for RW asset issuers to get on chain first? So that is the first aspect. Second, what is the distribution infra on the demand side, right? Like, I mean, if we are able to sell to accredited investors or to retail investors, where are they? How can we kind of reach them, message them, ensure that they can buy the asset, for example, and so on, right? Like, I mean, so that's again echoing Dennis's point around secondary liquidity, right? Like, I mean, how do you get on chain from fiat to like stable coins, for example? Where exactly? How can we make it more seamless? Will these new investors use a MetaMask, for example, right? Like, I mean, so essentially things like that, right? Like, I mean, the whole mindset, uh, like is will undergo some change, right? Like, these are not just, like people who are already very crypto native, right? Like, these can be people who, just want to buy, let's say, Apple stock, for example, something like that, right? Like, so yeah, of course, you require more infra, more clarity on that side in general. And I think basically it's the same story with stable coins, right? Like, I mean, stable coins were new. It was all crypto native users. Now you have, like Stripe bought out Bridge, for example. They bought out Privy, for example. Robinhood is doing its own layer two solution. And so what will happen is, like, we will get ahead with more and more regulatory clarity in general. So that it becomes easy for asset issuers to come, and then we are also kind of like building more distribution places, for example, liquidity infra, such as Lumia Stream, for example. We are on the Avail side, we are working on asset interoperability, so that like you don't need to think about chains from that aspect, right? Like, I mean, wherever you have funds, those can flow into buy the asset wherever it is deployed, for example. And then like there will be this whole more complex infra, like DeFi infra, coming into this later once we have solved some of these issues. And then you'll get into more complex, like financial and engineering problems, right? Like, I mean, if you get a lending borrow protocol like Aave or Morpho into the mix, how are these assets liquidated, for example? Like, what does the liquidation engine look like? I mean, because for some assets, there will be low liquidity, secondary liquidity. So it's all very fascinating, really. Like once you kind of think of it, and I think, but we've kind of learned a lot in the last 5-10 years, and we will apply a lot of these lessons here. And I think this is by far state of the infra in ledger technology compared to what is there in traditional finance. Now the thing is, we as an industry, will need to do much more education, much more pilots, much more prototypes, and the initial stream has already started, and I think this will only grow bigger as we go.
Okay. All right. So let's zoom in on some of the items that you just spoke about, Anurag, about interoperability, maybe even data availability as well. Uh, like some of the core problems can even be like scalability of the on-chain RWA architecture. So how do you think Avail plays a role in that? How does Avail's full stack approach solve both those problems? And how does that enable more use cases from tokenization to settlement and all of those things?
See, in a sense, at Avail, what we build is infra that makes applications easier to build, right? Like, I mean, the partners like Lumia to scale, to kind of, interoperate when they have more than one ledger, for example, and a bunch of other things, right? Like, so if you kind of think of it, any successful Web2 app, I mean, apps on the internet don't really live on one single big supercomputer. Like, they are on multiple servers distributed all over the place, scaled up and down when required, for example. And so with Avail, what we are really wanting to do is kind of create that infra and eventually abstract it so much that application developers can just tap into it. And that's what Lumia also is trying to do on top of Avail, right? Like, I mean, essentially, what they want to do is like ultimately it comes down to how can we make things like asset issuance easy, right? Like, I mean, that is the end user goal. How can we make it easy to purchase RW assets? How can we make it easy for people to access liquidity if they want to sell? Can they kind of, lend these RW assets, or essentially unlocking the value of these RW assets and then get, let's say, permissionless USDC, USDT, for example. So bunch of things, right? Like, I mean, very similar to, let's say, how developers see AWS or Google Cloud, right? Like, I mean, they will essentially, base their end user applications on top of this infra. What we really want to do is kind of eventually get to a point where all of this is very abstracted away. You basically kind of use ledgers and assets are interoperable, and all of this in the service of enabling these services on chain.
Nice. And Dennis, Lumia's positioning feels almost like Stripe for on-chain finance, right? So, what kind of infra stack are you building under the hood to support this high throughput RWA issuance and settlement? And along with that, how are you thinking about things like compliance, identity, and providing this institutional grade UX on chain?
Yeah. So we're doing quite a few things underneath the hood to make sure we tick some of these boxes. One of those things is compliance. Compliance is a must before anything is even thought about. So coming on chain. So what we built in line with some of our partners is on-chain KYC. So and we use ZKPs to secure your credentials. So your credentials, even if they were to say worst case scenario leaked, it's actually the ZKPs that are being leaked. So you can't really obviously reverse that. So we built this concept of Lumia Passport where you would either connect your existing wallet through an extension of mobile app, or we could create one for you using a social login. And then that uses MPC wallet in the background, so your private key is split. And once you create your wallet and you sign in, you will have the option to do KYC. Now, when you do KYC once on Lumia, and it's available as your credentials as ZKPs are available across the entire Lumia ecosystem. So any dApp that requires KYC, KYB, or ML procedures, rather than making the user jump through 10 hoops again and redo the entire flow, they can simply query our SDK and say, is this person KYC? Can you give me XYZ fields? Or can you give me the entire credentials as ZKPs? And then all they have to do is effectively just verify the ZKB that it's legitimate, and that's it. And you could proceed. And we attach these KYC details to your wallet, and then keep enriching it. So we bring stuff like your off-chain credit score from Web2 world. We build you a credit score on chain based on your activity, which tabs you're using, not just on Lumia, but across everything. And then we're trying to build this overview of a profile where KYC is attached, AML is attached, so that any application that comes in the future and starts building on Lumia, they have everything they need out of the box. So that's one of the key things. We do, of course, do KYB for institutions who want to tokenize their assets, commodities, real estate, etc. So they have to go through that as well. That's the first part. But then, we try to remove all complexities. So it's a good way to put it to say, you guys feel like Stripe, because that's kind of our aim. We want to simplify the process of minting a token, issuing it, making an offering, so you could raise funds for it if there is some sort of funding round around it, or you could distribute it through through Lumia Stream so that people can trade it actively. So that's the kind of process we're building, and we're building many abstraction layers on top so that you don't really get to see or touch the complexities of like bridging, transaction fees, gas costs, etc., nonce management, all that stuff that you typically see in the space. We want to remove all of that, and we even add in an AI layer on top so that you can speak to your wallet and just kind of let it do its thing. Those are some of the layers that we built on top. But when you go down deeper, we're pushing this DK stack with our sister company Gateway quite hard. So we are going to switch to pessimistic proofs. Right now, we are an FEP, full execution proof chain, ZKVM, which has its bottlenecks because ZK proofs are not cheap or lightweight to generate, although things are changing on that front, given what SP1 and Hypercube has done. SP1 Hypercube has done with the latest 6th development. That is going to change quite a bit, but we are switching to PP, pessimistic proof, so that we can scale TPS up. We can have flash blocks, effectively 250 millisecond block times. And we keep pushing the boundaries of ZK EVM, where we still leverage ZK technology's security, but we want to scale up to 10,000, 20,000, and then in 12 months, our roadmap has 100,000 plus TPS for our chain and all the L3s that's going to come along with it. So these are some of the things that we're pushing hard on. We are working hard in the background to scale the chain capabilities up, but at the same time, think about what these institutions need and how to sort of streamline the whole onboarding and the trading path of RW assets in general.
Yeah.
All right. Yeah. Andrea? Yeah.
Yeah, no, I think like Dennis brought up a very important point, right? Like, I mean, things like ZK-based KYC, like AML tracking, for example, right? Like, so I think, see, if you see in the traditional world, if you see something like in the UAE, there's this system called UAE Pass. In Singapore, there's Sing Pass, for example, and a lot of countries have something similar. But essentially, like you do like KYC once, and then like for any subsequent application that requires your identity check, for example, and so on, you have like a very nice integration so that you don't have to do KYC multiple times, for example. And of course, it can go beyond KYC. It might include AML, for example, and a bunch of other things. And it just makes interacting with different apps much easier, right? Like so all of these things actually play a very big role in kind of ensuring uptake of more and more applications, more and more, like let's say assets, for example. And in general, like I think all of this will come pretty soon since we have had so many improvements in how, let's say, ZK technology works in general. So I think all of this will play a big role, right? Like, I mean, sometimes, like I'd like to give the example of Apple Pay, right? Like, if you kind of think about it, like when you are using Apple Pay as a user, you are kind of, like just opening up your phone, kind of tapping and getting, like getting the payment done. But in general, there's a lot of infra that goes behind making this easy experience happen, great UX experience happen. And so basically it contains all of the technology underneath, right? Like there's a payment rail, there's a ID check, there is a credit check, so many things happening, but to the user it feels like very simple, right? Like, and so there are similar tools not only for customers, there are also similar tools for like onboarding businesses. So like asset issuers, how can we make onboarding asset issuers much more simple, compliant, governance ready, for example, and so on. So I think basically the role of infrastructure in enabling all of this is very important, because without great infra, you cannot have great user applications. And so so we are already seeing a lot of this, as Dennis already mentioned. They're already working on a lot of middleware that makes all of these things easy, and all of this is only going to improve from here on.
Yeah, looks like everyone's excited about RWAs, right? So let's take a future outlook, right? Like right now we have what we have, and we're seeing a lot of growth. But what does success look like for you guys in 12 to 18 months in this RWA space? And what infrastructure breakthroughs still need to happen for RWs to scale and like to basically let us reach the next level, right? So what does that success look like in 12 to 18 months, and what do you think needs for that breakthrough to happen to get us to the next level?
Yeah,
Then is
I
it
think see,
Yeah,
Anurag,
Anurag,
yeah.
you go
yeah,
first.
yeah. I think we see basically we've kind of have the scalability infra ready, I would say. Interoperability infra is like is already there, but like more important things will come. And see, interoperability, I'm not only talking about ledger or chain interoperability. It's also things like asset interoperability, the things like that, right? Like, I mean, I think from a 12 to 18 month use case, what I'm especially looking for is for more and more assets to be issued on chain, them being able to be move freely across, like ledgers, for example. Um, Money or stable coins to be kind of like moving easily between these chains. So for Lumia, for example, what we want to create the happy case is, even if users have assets on any other chains, it should be easy to kind of move these to Lumia to buy assets on Lumia very, just to make it one click from an experience point of view. And I think from a 12 to 18 month perspective, I would very much love if we can kind of replicate complex structured financial infra on chain, things like like lending against your stocks, your like even let's say real estate, for example, right? Like, I mean, anything like that, right? Like so, basically very similar to how, let's say, loan against property, loan against stocks, loan against bonds work in traditional finance. Like a lot of this is very very easy to do in blockchains essentially. Once we kind of solve a lot of these onboarding issues for asset issuers and for people to kind of come on chain, I think what I'm really excited is, can we start replicating some of these more complex structured financial infra on chain, asset backed securities, derivatives, that sort of a thing, so that like it really unlocks the value of these RW assets. And like the on chain economy grows bigger. That is really what I'm looking forward to.
Yeah, I mean, I'm in line with everything Anurag said. So we have to have more of that. The way I see things happening in the next 12 to 18 months is, as per Anurag's point earlier as well, we have to, as Web3 companies, we have to go beyond our echo chambers and CT and the typical, meta chasing and narrative chasing, and get rid of all this and start actually looking at real business with real value. So the way I see it is, we have to attend as many pilot programs as we can. We have to push institutions, TradFi institutions, to try things out and to give them a taste of what can actually happen. it's all good presenting it in a slideshow or like in a deck or talking about it. But when they actually get to see how much money they can save, how quick things can move once they're on chain, then it's like, it's a no-brainer for them to actually move to this new infrastructure and upgrade their systems. And we've seen this happen personally at Lumia, where we speak to clients, and these are very large players around the globe, where they're all looking and interested in upgrading the existing systems to be an on-chain system, whether that's like a clearinghouse, whether that's a stock market, whether that's the CME becoming on chain. All of these things, there is appetite for it, but we need to give them a taster. Once that happens, effectively, the way I see the transition happen is I always make this analogy, but it's sort of like it is a Trojan horse, right? So you go in and say, look what you could do, and replicate and mirror what today's TradFi system is. And then over time, once the liquidity and the entire infrastructure becomes on chain, then you effectively flip the script and make the blockchain the source of truth, as opposed to the TradFi becoming source of truth and we're just mirroring it. So it kind of starts flipping, and then the blockchain becomes source of truth. And then the mirror in action actually becomes off-chain. So the off-chain components mirror what's on the blockchain, because obviously blockchain is a lot more secure, transparent, it's immutable. So we have to first mirror it, and then extend it, and then flip the script, and then make blockchain source of truth. And once that happens, a lot of doors open up. We just had news yesterday that the US is considering using crypto assets in your wallet as collateral for mortgages. So once these kind of things happen and we keep pushing the boundaries, I could, for example, take out a collateral against my home, which is tokenized on chain, and then borrow directly on chain, and then use that in a DeFi protocol to earn, I don't know, let's say 6% APY, while my mortgage interest is 3%. So I have a net profit, right? And I could keep doing this, and I could keep playing with things and sort of layer things up. And the best part about all of this is, all of these systems are probably, well, not probably, they exist in the TradFi space and the Wall Streets, but it's a very closed system. You have to be a credit investor. You have to be in the banking circle. The whole point of cryptocurrency from day one, with Satoshi coming, is that it was supposed to be transparent and for everyone. Right? So there was supposed to be a level playing ground for everyone. And now blockchain can actually really bring this and go beyond just speculation hype, because these tokens that we bring on chain, they have intrinsic value because they're attached to something in the real world, and they are accessible to everyone across the globe, like not just developed nations of the West, but across the globe. And that is a big plus for us. We have idle liquidity, idle assets, commodities sitting in Africa. But who can actually make use of that? Nobody. It's very hard to do business in Africa because you can't access it. There's trust problems. But blockchain gets rid of everything and kind of streamlines things. I'm not saying it's a dream scenario where blockchain solves everything, but it certainly fixes some of the problems that we have today with Wall Street and TradFi, and makes it a lot more accessible.
No, absolutely, absolutely. I mean, I totally agree with Dennis' point that essentially the whole point of this is democratizing access to a bunch of opportunities, right? Like, I mean, essentially, as Dennis said, right, like a lot of these opportunities or financial instruments are only accessible to like a narrow set of investors, like institutionals or accredited investors, for example. And the distribution channels are also very low. And from a structural point of view, like if you zoom out, why is that? Is because, of course, the cost of um, creating these products, managing this, maintaining them, and then basically distributing them is very high in general from like based on how things work really. And so when you want to think about kind of distributing this to a bigger base, it just the current traditional finance infra is it's just too expensive to do it, and that's why it stays limited, right? Like, I mean, of course, I'm also kind of hand waving all the complexity. There's also difference between selling to accredited investors and selling to retail investors, risks, etc., etc. But the idea is that democratization of this is very important. In general, like even if you kind of think about, like, let's say even accredited investors, right? Like, I mean, there are asset opportunities in, let's say, the US, for example, or in London, for example, that are not accessible to many accredited investors in various other geographies, for example, right? Like, I mean, there might be like a stable yield bearing, oil field in Texas, US, which, you can actually invest in today, but it's not accessible to, let's say, investors in Singapore or the UAE, for example. I mean, and so the bunch of things like that, right? So it really is, the story really is about how can we democratize access, right? And how can we do it in a regulatory compliant manner, really. And the real draw for traditional financial institutions is also it's not only just a cost thing, right? It's also about opening up access, right? Every business in the world is interested. When we talk to traditional financial institutions, the main thing is, initially from their angle, the cost was a thing which they attached blockchain to, right? Blockchain reduces cost. But now the conversation has changed to, can we increase our market exposure, really? Can we increase our investor base? Can you bring us more business? Is this solution going to bring more business um, in general, right? And so that's been the shift in perception, really. Initially, it was about, okay, blockchain will reduce costs, which it does, for example. But in general, in any mid-size, or big-size organization, there are two lens at which businesses look at any new initiative, right? Is basically, is this going to reduce costs, um, or is it going to increase my top line, right? So I think conversations are going in both these approaches, and in general, the more people in the crypto industry think about how can we increase top line for existing businesses, it's actually, the infrastructure is, has been built for scalability. For example, interoperability is all coming. We are building out the RWA abstraction infra, let's say for Lumia is doing excellent work there. The thing is, how can we bridge that gap between what it does today and what it can do tomorrow? And I think I'm very excited personally, really, for all of this.
Right, so we are about to reach the top of the hour. So just a final few questions, one to Anurag, one to Dennis here. Anurag, what's something exciting coming from Avail in the context of RWA ready infrastructure that you might want to share? Some alpha that you want to share.
Yeah, I think, of course, we already help partners such as Lumia and others, in general, from a scalability perspective, from an interop perspective, so that, they just make their end business as easy as possible. So we have Nexus coming up, Nexus beta launch coming up pretty soon for Avail, and that really does two things, right? It ensures that we are able to kind of make it easy for chains such as Lumia to attract liquidity from other chains. So even if users have assets on other chains, they should be able to easily use applications on Lumia in and essentially in a mostly a one-click, two-click sort of a workflow, for example. So first use case is, how can we help bring more and more liquidity into let's say Lumia, for example. The second is, infra that might not be on all chains. So, for example, if we have, let's say, Uniswap that is deployed on other chains, and users on Lumia want to get access to that infra for, let's say, swapping, for example. So they should be able to use that infra on other chains in one click, and then get the, let's say, Uniswap, get the swapped asset back, so that they can then use it on apps on Lumia, for example. So I think we are very bullish on improving the asset interop experience, and this is much more than just a bridge, right? All of this works in the app, embedded app experience, so that the user doesn't have to go out of the app, doesn't have to think about assets lying on multiple chains. So I think that will be especially important. And of course, we are in the wings, along with partners such as Lumia, we are planning a bunch of middleware build outs that will just help the RWA use case.
Okay, and looks like we have a question from Carlos, can we get an ETA on Avail Nexus? Do
The
you want
next
to give
couple of
that?
weeks, we are opening up the beta.
Okay, awesome. So that's an alpha. You heard first from here. And then Dennis, any big milestones or launches coming from Lumia that you can share with the audience today?
Yeah, so we have quite a few, so because we've been developing in the background, keeping heads down for the past 9 months. So now we're at a stage where we can slowly roll things out. So some of the things that we're doing, which I mentioned, I don't want to go into too much detail because marketing will tell me off. But this whole L3 vision of Infinite, you'll see this push from our side where we will start bringing clients and institutions to run their own L3s under their own sovereignty, and effectively have a block space for their own, which will be interconnected and interoperable thanks to Avail's offerings. We want to actually make every layer 3 inherit whatever Lumia has built in. So that means inheriting Avail DA, Avail Nexus, Avail Fusion, so that we have this full circle of interoperability. So that would be coming. We plan to make that public within the next 4 to 5 weeks, I would say. The next thing that is on our list is, as I mentioned earlier, we're switching from FEP to PP execution path, and that's going to happen within the next 2-3 weeks. We're nearly there. Once that happens, the next push we have after that, about 4 weeks after that, would be to drop the block speeds to about 250 milliseconds block speeds. And then we have a bunch of institutions and clients that we're working with, we've been pitching to for the past 2 months. I can't give any names, unfortunately, yet, but you'll hear more of those soon and how they are planning to come on chain and sort of be interoperable between the existing Web3 ecosystem. So you'll hear of that soon. And lastly, the tokenization and the offerings that's going to be coming up. So effectively, you could be onboarded as an institution, go through KYB, and open up a sort of offering page, like a Kickstarter for your asset. For example, if you have pre-mined gold and you have the necessary proof and the legal paperwork, and let's say you need $10 million to mine the gold and sell it, you can create an offering for that through Lumia, tokenize the unmined gold, buy it at a discount, and then once the gold is mined and sold, you get the profit share based on the promises that were made by the institution. So that whole flow is coming on chain as well within the next 6 weeks. And then we're building DeFi applications around us. So, your tokenized asset doesn't just sit in your wallet. You can borrow against it because it has value. So that's happening. And then the lastly, which is going to be going live around the end of August, is Lumia Stream. So Lumia Stream is currently plugged into Binance to get the liquidity from Binance, but we are expanding that. We are already working with OKX to plug that in. We are going to plug into Bybit and then the rest of the top 10 sexes. And then we want to go one step beyond that. We are talking to a couple of Web2 based exchanges that deal with commodities in the Middle East region. So we want to plug into them. So we effectively become a distribution channel for traditional finance as well as decentralized finance.
Sounds awesome. So, yeah, I mean, this has been a great conversation that we've had today. Some closing remarks, some key takeaways that I got from this conversation was that uh, basically RWAs are at the tipping point of adoption, right? Infra like Avail is enabling secure, scalable, modular rollups, and in turn enabling those RWA solutions. Lumia is bridging the gap between TradFi and on-chain finance. And finally, like modular plus execution first equals to a powerful stack for the next wave of real world use cases. Yeah, it's been great having you both on board and talking through this emerging space. So yeah, follow Avail Project and Lumia XYZ on X to stay updated for more news. We'll be sharing a replay of this live stream as well on YouTube and on X as well. Thanks for joining us. Thank you both for joining me, and thank you to the audience for tuning in.
Thank you for having me.
Yep. Thank you for having me. Great discussion.
Take care.
Okay. See you. Bye.